Must unmutify. Microphone check and screen share check, please. Let's try that again. Nice. Note to self, turn microphone on. All right, good evening, guys. Ken at Tortoise Capital, nightly strategy podcast for August 1st, 2022. We'll just start with the market health check in a minute. First thing, I just want to acknowledge some really good work from Chunlong Lee. He's been working in the Creativity 202 course and doing some good work. And so he just was looking to improve his exit strategies in C202. He didn't think he was going to learn a new course. But we've been talking about the sniper as part of our development work. So he decided to test it in his simulator of choice, Forex Tester 5, which is a great way to simulate realistic trading. I have used it myself to get lots of repetitions. And so he was working on a 3-minute chart, practiced 771 trades over a 10-week period. So about 75 trades per week, which works out to about 15 trades per day, which is about correct with the sniper on 3-minute charts. And he's using IWM as a robust, multi-directional, very liquid, very volatile, excellent trading vehicle, which has options and futures, so it becomes a nice way to practice on an ETF that translates into futures and options trading very nicely. So 394 wins, 326 trades, so that's about a 4-to-3 win ratio. His best profitable trade was about 1180, which was 5 times larger than his maximum loss trade, so that's correct. His net profit on a $10,000 account, 13.6, so that's 136% return in 10 weeks. Average profit $90, average loss $60, so that's about, with a little bit of cleanup, a 3-to-2 payoff rate on a 4-to-3. And this is, by his acknowledgement, he hasn't grasped all of the methods, but he can already see at his current level of understanding the essence of sniper trading intraday. So everybody that was in the creativity course just got the sniper trading system as my gift, because they were the first ones in and were willing to take the risk on taking a workshop that was geared towards creativity itself rather than just technical trading. So I wanted to respect the risk and give him an unforeseen payoff. He's thinking about the frog as the Zen master. He just sits and sits. When there is food flying by, he takes it, and then he sits again. And that's an old classic Zen story, about 3,000 years old. So many thanks to Chunlong for his willingness to share. I also wanted to acknowledge some really good work from Constantine. He's not in here tonight. He's been trading the symbols that he knows, and in this case, he was looking at gold spot versus the dollar on a 5-minute chart, and he notices that on the 5 minutes, when you get a Z3 excursion, in other words, a move past the Z3, and then switch to one time frame lower. So in this case, he goes from a 5-minute to the 1-minute chart because he doesn't have 3-minute charts on MT4, and then waits for the P1 reversal and then the crossing of the dragon, in other words, the SSC. It's a great opportunity for a good trade. So you get an extreme move on the higher time frame and then come down and dial in. So he sees the P1 here, and that would be the SSC where it crosses the dragon and hits the PSAR. Now he ends up taking this one right here, which is like a Kata 2. But with this standard risk box, both of those trades work, and he gets one leg up. Now, I would argue that on that kind of an excursion that starts to sell off, I might have had just taken it right here instead of suffering through all this. And if I had taken this as the exit, I might very well have tried a re-entry, right here to get right back into it. On the other hand, this is 1 minute, and so riding it out a little bit is fine, especially if your stop is down here, by the PSAR, by this rising PSAR or the skin of the dragon. But he gets a nice, he was using the MA30 as on the 5 minutes to take profit, which is like that would be the equivalent of an MA150 on a 1 minute chart, is this red line. So if you're going to do that 5 and 1, you have to interpolate. So the 30-minute MA5 is nothing more than a reversion to the mean on the 5-minute chart. So he gets to here, and he takes essentially that trade. That's a perfect reversion to the mean trade after an expanded move to a Z3 excursion that has now reversed. When you're trading pairs, that's actually a really good trade because you already see the magnitude of the normal relationship is where it's following the MA30, and then that's the huge deviation, and it's an abnormally large because you saw it as Z3 on the 5 minute, so you dial down to tactical and off you go. And he's been crushing that. If you take a look at his stats from that we posted over the weekend, I mean, he's talking about an 85% win rate and a SQN of about 6, just trading his preferred symbol. So he's already kind of dialed into a really attractive system. And this is the essence of snipering, by the way. You find something that is in a compound critical state based on location and volatility. So you have an extreme move to Z3, and the Bollinger Bands have expanded to these wide stretches. Then the reversion to the mean is the least surprising move, and then he uses the fractal nature of the framework to exploit the tactical trade. So really well done. Really well done. Notice the if you come down in here and you see this little rising MACD, that's the turning point when it goes from spring into summer, and that's a really positive sign. You get the PSAR flip. That's why I kind of like this entry right here instead of here. I'd like to get in sooner because you don't know that this thing is not going to go straight up. As soon as it takes out the PSAR, I'm ready to go with my standard risk box down here. So really nice work from Constantine. That's hybrid trading in a nutshell. Multiple time frame standard patterns. So well done to both of the fellas. Market health check. Inside day, so the low was higher than the previous, or the high was lower than yesterday's high, and the high was lower than yesterday's high, and the low was higher than yesterday's low. So you got this inside day that makes it a question mark. What is it going to do? It gave back just a little bit to close right in the middle of that range, which gives you a perfect potential for breakout in either direction. Nice. Your 5-day range is large compared to the 10-day range. So this is right at the tail end of a strong move that's now consolidating. Is it going to fail? Is it going to continue? We don't know, and that's what makes a consolidated compound critical state really useful to us. What we like is the fact that we got this Kata 2 action going on, that it's outside of the dragon, that the PSAR is just motoring right along, say, yep, everything up. And we have a nice healthy separation between the RL10 and the baby dragon, so that's been a strong move. So this is a zero state pause that refreshes, and we're ready to play the breakout in either direction. We're remembering that this is still a bearish normal, so a move back down to the PSAR would not be unusual. So that's a 1, 2, 3, almost 4 to 1. And then the upside has no resistance overhead because it's cleared all of this resistance. So this thing can go large in either direction. The fact that it did not fail today, I actually take as a positive sign. When it doesn't fail in a bear market and it has all this extra boost, that feels pretty good. All right, let's take a look at the sectors and see what was working today. Alrighty. So the S&P was down a fraction at minus 0.3. Emerging markets were the weakest at minus 0.58, or 0.85, excuse me. Diamonds were slightly better, only down 0.19. The Russell and the Qs were both basically flat, and there's your break-even point between the gains and the losses. Treasuries were the only big index for us that was in the green. Strong 2.2 closed above the key price level of 120. That's important. I like the Tesla did not fail. It closed at 891, so it's right near that 900. The high of the day was up around 935. So there was quite a pullback in Tesla today. And his range stat is still about $50, so Tesla's R10 is still going to be about $5. No change on that one. $4.89 if you want to be technical. And his reward to risk compared to the 10-day high is 0 because he's at the 10-day high. So so this is a pure momentum play. That's not a value play at all. All right, let's look at the underperformers first. So again, SPY minus 0.3. Here's our first cluster. ARC Genomics, Materials, Finance, and Real Estate between 0.63 and 0.85. The next cluster here between 2% and 1%. Food, Brazil, clean energy, Mexico, blended commodities. So there was weakness in energy across the board. And then the real weakness here in this cluster of sectors between 2% and 4%. Biotech, energy, oil exploration, marijuana continues to suffer at minus 2.4. Blended large cap crypto, oil, Ethereum, Bitcoin. Now the individual companies that couldn't hang today: Alcoa, 5%. Devon Energy, 2%. Cliff, 1.13. Microsoft, a disappointment at 1%. Apple, disappointing at 0.6, and then Coinbase at 0.41. So 2 out of our 3 metals, Alcoa and Cliff, were underperforming. But U.S. Steel outperformed today. So U.S. Steel is still going to be the metal of choice. looking at tomorrow in terms of it's easier to believe in U.S. Steel because it's still going up. That's the reason I prefer it to the other two. All right, to the upside, we had first, again, the S&P minus 0.3, tech and blockchain 0.2, global future of finance, Robinhood, Wheat and Precious basically flat, commercial real estate flat, and here's the boundary between gains and losses. So the FANGs were flat. S&P discretionary, lumber and lumber between 0.5 and 0.1. The stronger sectors now, Aussie dollar, ARC Innovation, staples, that's defense, and then lithium batteries, 1.5 to 0.7. The VIX was warning. That's people buying some portfolio insurance after that new 30-day high and a strong 5-day move that couldn't break out any higher. So that's the reason why people would start hedging the gains that they'd make. Instead of selling their positions, they're just paying a premium to buy leveraged portfolio insurance. That's why you see that. The individual targets that were excellent, PayPal and Squarespace, 2.3, Rivian, 1.5, U.S. Steel, 0.6, Tesla, basically flat, closed at 891. So a broad-based, not so broad, I guess, maybe selective areas for strength. It looks like defensive plays more, to be honest. Wood and lumber. And I like U.S. Steel here. I really do. I think it's going to be okay. All right, let's look at the reports for today. Sniper trade of the day today was ARE. Again, Alexandria Real Estate. We're just going to keep riding it till it doesn't work. Had a big gap down. I did not play the opening. I wanted to see it shake out for the first 30 minutes. It started rolling over. This looked to me like beginning to fail. So tried short with the standard risk box of, I was using 60 cents. It sold off and then started to reverse, so I wanted to get paid a little bit. So that's about half an hour. I tried the long side on the PSAR flip, aiming for a return to close the gap. It failed almost immediately. I gave back a half, so those first two trades negated each other. It fell out the bottom of the risk box, so I got short. I was slow to get out of this one with just a no-lose plus dinner for two. That was not so good. However, the PSAR flip, so this was a stop and reverse, worked for about, that's 1R, so that's about plus one. It rolled over. I did not take this immediately. I waited really for a clear collapsing dragon in here, and I was probably late on getting that in. And then just followed the PSAR down and took about another plus one. So all told, about two in ARE. It really was not much of a directional move. That was really just oscillating. But it was that kind of day in the market anyway, so I was happy to take what I could get. We've already seen the health check. Here's that 30-minute simplified sniper trading, but using the 30-minute. So again, this is going to be our 5-day look back. So this is 1 day, 2 days, 3 days, 4 days, 5 days. Then this is our 10-day look back. And then today was basically a nothing kind of a day that finished right, it closed right in the middle. Whereas Friday was a larger range day that finished strong. This one was just nothing and closed weakly. So that makes this a great big zero state. And now you can see why guys might be licking their chops and wanting to buy VXX to protect against a routine move back to each of these support levels, which means that a break below today's low would be all the signal a short-term shark or hyena would need to start trying to play the short side to take advantage of everybody that made money here that wants to get out of their position and preserve profit. So that would be the first sign of a potential short. Then each of these would be confirming a failure of support. Now, if this breaks the 5-day low, then it's a short shot, an easy shot down to the 10-day low. So that's your price ladder to the downside. The only argument to the upside is that there's no resistance, and that would be seen as a COTA 2. So I am happy to just take a COTA 2 on this one tomorrow and take it long that way, or trade it out of this zero state here and trade it downwards. So ARE to me is a perfect setup. This is an orderly move and an orderly stall, and I just want to see which way the momentum goes, up or down. Perfect compound critical state. And that's on 30-minute bars, so I don't have to chase each and every price on this one, and so we'll set that one up for tomorrow. Dashboard number 1. Still bearish normal. We're getting close now to the sideways. We're only 3% away from it. A little bit of weakness creeping in here, but still improving on the longer term. This is the warning about the dead cat bounces. I'm not going to keep repeating that, but it does get my attention. The min pains, Disney, McDonald's, IBM, Walgreens, the diamonds. The losing positions, or the max pains, Intel, Verizon, Alcoa, Merck, and American Express. So clear distinction between winners and losers. This is starting to flash a signal about maybe wanting to roll over if we saw increased volatility. That just means we're in that critical state, ready to go in either direction, which is ideal for short-term traders. Doesn't mean it's going to fail, and I'm not making a prediction, but I'm prepared to go in either direction without bias. That's my favorite time of the season to trade, if I'm being honest, because I don't have to have directionality. Lots of dojis today. A couple auto framers. 1 5-day down in Merck with a 2.9 to 1. That's actually a nice frame to set up. If you were to see weakness tomorrow and weakness in the healthcare and Merck is also down, that's a nice one because you have a big reward to risk. ETFs, much clearer warning about dead cat bounces here. Half of them are on dojis. Only one auto framer, though, in oil. And still had a few breakouts to the upside. EFA was not bad. Japan was better. Gold tipped up a little bit. Treasuries had, I think, the strongest move of the day. And then staples as a defensive play. And consumer discretionary just snuck in there with a little bit of a breakout. So lots of goodies to choose from. But this is a market that paused today. And fortune will favor the non-directional bias tomorrow. People that are ready to go in either direction will benefit from tomorrow. Only a couple auto framers. These are the ones that are the furthest from their 10-day high. AT&T, IBM, Merck, Oil, and Intel. The usual suspects. Only a handful of squeezes. I like that the energy sector, you have oil, energy, Chevron. Chevron would be my play to be ready for that one because that's been such a strong energy company and he's in a compressed state. In the sniper set, Just a handful of Godzillas. Uh, Cincinnati Financial continues to have a large 5-day, a quiet 1-day. Same with Bax. And Newmont Mining is starting to just calm down completely. That's almost as getting into a stealth Godzilla. It's been horrible, but is really stealthy on both the 5-day and the 1-day. So that would look like this. Horrible Godzilla, but now is very, very quiet on 5-day and 1-day. So he's ready for a break with a very small risk. And then the first break out of that compression will be a big surprise move. So Newmont Mining should be on your short list. Whereas the other three have already had large 5-day moves. Newmont Mining is the opposite of that. So we like that. No Godzillas in the tactical set. Lots of fireworks in the S&P 500. These are the green ones are the ones that are exceptionally noisy on the 5-day, but exceptionally quiet on the 1-day. So that feels like a fireworks with a great big 5-day move. And then the last day was a tiny little doji. Wasn't much follow through. Is it going to break out or fall back? We don't know. That's what makes it interesting. The fact that there was so much volatility says it was recently in play. GWW is the one really to look at because that has such a large 5-day move, and ROL is pretty close second. I'd investigate those. The fence sitters, right in the middle of their long-term and intermediate term. Ulta is very quiet, but these two, CBOE and J, have both started to make their move, so I'd be looking for momentum plays. Big momentum plays on those two. Look for follow through and continuity on the direction of their trade. I'll leave that to you to investigate. The most quiets, nothing really stands out. On the most volatile, what I always like to see are the extremes. So you have an extremely large 5-day range, and then here's some in the red. These are all the ones that were extraordinarily quiet, and the ones in the green are extraordinarily volatile today. So depending on which one you want to play, these green and then red as a breakout bracket, but you want to play the green as a momentum follow through. So I'd be looking at L, Ford, PKI, and Board of Exchange. Intel would be a high priority also. That's a symbol that is well in play at the bottom of his long-term sell-off with a 15-cent intraday R10. Pretty nice. Here's your tactical symbol set. Only a handful, very volatile. Mexico looks really interesting with a 1-day break. Microsoft I really like as a breakout in either direction. This has been a strong short-term move that was almost non-existent today, so it terminated in a tiny little doji. I think you put a bracket around Microsoft and trade it in either direction. NDX, here's that strength in McDonald's, really on every measured time frame. Coca-Cola is a close second. Hamburgers and Cokes. Down here, Staples gives you the strongest long-term and the strongest short-term on a relative basis, so XLP should be on your list. Let's come back to this one. So this is what that inside day looks like, again, on that chart. So you have this, leg 1, leg 2, leg 3, and now it's starting to stall a little bit. And you say, all right, does that have any more legs to the upside, or is that the beginning of a return back down here to 390? I don't know, but you get a large move in either direction from a zero state. That's a perfect pivot point. And the upward slope on the RL30 was at 1.5 sigma anyway and starting to stall a little bit. So that would be a natural place for it to come back to the mean, which would give you this kind of a move. And the percent stretch is at a natural resistance point too. So there's plenty of technical reasons to believe that a reversal could happen tomorrow. Plus the fact that we're just in a bear normal. And so that would not be surprising. All right, that's everything I want to look at on the daily. Let's take a look at a handful of sniper trades. I think this was this AR. No, this is peak. So this is our other healthcare real estate. This one also had a big gap down. ARE sorted itself out sooner. I didn't like all that volatility, so I wanted to see it compress first. So now it's getting back to something like a normal state in here. And there's still plenty of room to the upside to close the gap, and plenty of room to the downside if it were to fail. So I'm really just hoping to see some kind of consolidation and then an orderly breakout. Too much noise in the morning to chase on on something that is not a market leader. What I got was the breakdown through a second COTA 2. So here was a COTA 2. Here was the next one. I waited for the CD to hit. There's my entry. That's the standard risk box. And there just wasn't much room left in this thing. It did not follow through to the downside. But now on that reversal, that failure to fail further did not fail. So now I can set up a really wide risk box, the standard. My execution line would be here. So I'm only risking this, which is about a 0.4. And I'm hoping to get above the high of the day and then to close the gap. So that's really what I'm hoping to see. Wasn't much follow through. I gave back half, ended up giving back half. So captured about 0.3. Not much. This one did not feel like it was moving. This was getting choppy like ARE, but ever the optimist. I play the COTA 2. Standard risk box. I will use this as my execution, so I'm only risking about 0.3 on that one. And it has to get above this line here to be very interesting. So this space in here is the tactical trade. I just want to get out of there with a no lose plus dinner for 2 if I can. I do. And I thought hard about getting that short because it failed. This is the sound of regret. So this is where today's breakdown occurred. So I should have been more alert to this. PSAR flip failing right where it was supposed to fail, and then targeting down to here. So I missed that one. Felt stupid. That felt like a COTA 2 from here. I wasn't over feeling stupid yet on this one, and missing this one and missing that one, so I was still enjoy the feeling of being stupid and missed the return to the peak. So it actually turned out better in the afternoon. It was so choppy at intraday. I didn't like how big the ranges were on the 3-minute bar, so it did not feel like a smooth trader today. More like chaos. All right, so this is Lowe's Corporation. So this is a TC2000 alert. It there was no gap on it, but that thing just started dropping like a rock. So it moved to, it was a minus R10 right off the bat. So that's a TC2000 alert. So I just hung another box on it. I just wanted to see, I don't normally trade this one. By the time it had moved another box straight down, I went ahead and put the I put a standard entry on it. Here's the usual risk box. That's the R10, which in this case for Lowe's is 50 cents. Selling off nicely. Felt stupid I didn't have a second position on here yet. Now really stupid. This is where I thought hard about putting that little R10 wiggle where it just and then fails again, so I thought hard about, but that would have been smart, and I just felt so stupid from here. I was just enjoying the pity today and just trading one. Plus this is not not one of my normal symbols yet, so I'm just still experimenting with him. Gives me a double bottom. It comes into the PSAR station, and all things considered, that felt like a pretty good set of decisions. That's about 1, 2, probably 3R on a new symbol. Thank you, TC2000, for the alerts that you give me. Now I'm interested in the SSC on this one. And I take a COTA 2. This is right by the numbers. You know, my belief was that this thing had fallen so far that if this was going to work, then there would probably be a COTA 2 in my near future, which there was. So standard risk. It has to get above this, and then the next resistance is going to be about here, and then all the way to the high of the day. So I had high hopes on this one, but I'm only going to play one position. Standard exit feels good. COTA 2. This failure to fail all the way through here felt like that was the selling pressure. And now this is all just guys that are calmly buying a good company on sale. So I don't mind the COTA 2 and the COTA 2. Kind of standard exit, and that takes it into the close for the day. So that felt pretty good. That was about +4 in a new symbol, and I think that's going to be in play because of the size of the sell-off. That's going to look like a value play. Lowe's is on sale, and it's also going to have some people that had already made some money are looking for second-day momentum. But by the same token, if this thing starts selling off, then there's going to be guys that want to protect their gains, but also bears that want to come in and push this thing down to a new low. So if it gets below about 54.7, then that's going to be the trigger for a big move down, another big move down. So that's kind of the line in the sand. But anything above 56 even is going to be a signal to the upside. So this is no man's land in here tomorrow. That's the tactical trade. Okay? Check or hold. Okay, this is Alexandria. I already showed you this one. I'll just clear the deck. This was a couple on the sniper trade of the day. And then this one is Alcoa. So Alcoa had a big sell off. I was monkeying around with the healthcare companies and missed this one. On a better day, I would have this and try to capture that. That move is certainly tradable for me under when my game face is on. It was not very sharp today. There's the R10 reversal, PSAR flip, standard entry on the PSAR flip. I'm looking to return to the to yesterday's price. That's my risk box. So that's about 1, 2, 3 to the upside. It reverses quickly, so I take about half an hour loss. This was no follow through. Collapsing dragon. Standard risk box. Looking for the downside move with this whole thing rolling over. Scratch. SSC. So now what I have is the big move has been down and then holding. SSC, standard risk. Nothing. Because why not? It had, if it was going to recover, in my view, it should have been okay, dude. You had like 3 times to go, and then you didn't. That feels like down. Got paid a little bit, finally. So that's 1 unit of risk. 1, 2. Pays for all this mess. So that was my sniper trade. I thought the only one I was really any good on was the lows. And I'm looking at that one for a continuation trade tomorrow. I'm also going to look at U.S. Steel. I was monkeying around with Alcoa and didn't really get any traction. U.S. Steel looks like a better trade for tomorrow. All right, let's look at the traders. See what they did today. All right, so this one was Constantine's again. I just really want to emphasize how good that was. You can really, especially as crappy as I was today. This is really good. So again, the main idea sees a Z3 excursion on the 5-minute time frame, drills down, waits to see the P1 crossing of the dragon, and then gets this entry in here and plays back to the Bollinger Band mean, which is the RL30 in here as a profit target. So he doesn't want to let that go. He could take that either here or here. I suspect he took it here, although he did draw his line all the way over. But I also want to just point out that if you take this profit and then come back and see that, that's a nice argument for a Kata 2, because this never broke below the PSAR or the belly of the dragon, and now all it has to do is get above this, and that could really go. So this is a nice way to get some money in hand and then see what the test will bring. If it starts to fail, just take your little no-lose plus dinner for two. If it breaks through, you got a great entry and you are free and clear and well above all this crap, which is all of this. So if this breaks above like 1775, you think like that can really go. And that should still be in play tomorrow if it gets above 1775 in the gold spot versus dollar. So that's really good work from Constantine. Here's Luke giving us some 5-minute Aussie action here. Really good work again, Luke, on the creativity stuff. It's gratifying to see you grinding on the creativity exercises the same way that you grind on systems. You are being who you are, and that is refreshing to see. So he gets a kind of Kata 2 entry here as it crosses above the dragon, gets paid. I like the reversal at the Bollinger Band mean. He got what was there. Quick reversal, nothing happening, so he gets out. It doesn't fail, so he plays the breakout again to the upside, gets paid just in time to go take care of some really important business, which was much more important than just putting a trailing stop on this. You wouldn't want to do that. Or do you? Think about the trailing stop. Why not? He comes back in time to get the second Kata 2 for a little taste, and it's still 3.6, so that's pretty good. That could have been 10. Trailing stop. Try it with the 30-year position till you get used to the idea of not being there. So here's Les. This is the euro dollar 3-minute. Z3 pinch. Winter turns to spring, crosses above the Bollinger Band mean. He just goes for it. Gets paid. It's all right. You don't want one? Take one. He tries the PSAR flip and the dragon rolling over, so he wants to get short. He's traded inside the river, so he doesn't stick around and quick scratch. But that's the one. I think you may have been gripping it so tight that you didn't take the signal that was actually there, which would give you the best trade of the day. And then this is the PSAR flip to the downside, quick reversal. PSAR flip to the downside. They all look the same leaving the station, and when he's aligned with price, it's 1.3, but he doesn't stay wrong too long. That's a 2-to-1 ratio. That's what intention and rule sets will do for you. And on that difference, you can make a living. So nice work for 1.7. All right, that's everything we got for today. We had some good stories in the Creativity 202. So I've made a decision on what to do with the a new startup on that. The other guys are 7 lessons into this already, which is already like a 2-month effort. And they have a small group cohort identity already. They have graciously allowed their sessions to be taped. So I'm willing to open up a new cohort, but we will treat that cohort as a separate entity with a separate debriefing schedule. It'll probably be like Tuesday night debriefs for the U.S. guys, or if it's small numbers, it'll be self-paced. So I will put out an announcement on that in writing, but I think I'm ready to start that on 15 August to give the other guys a good head start and to have a chance to spread the word to get folks ready to go. But if you already know you want to do it and you're willing to just go ahead and get started on the background info and start listening to the other guys' True Story Circles, you can get a leg up just by signing up and get on with it. So both of those options are available as a cohort or as a small group. If you have trading accountability partners and 3 of you would like to take the course together, I'll give you all 1,000 off on that just to get you going and give you some skin in the game. So if you got 3 people in the sound of my voice or more, each 3 will get 1,000 off. Because I just think it's such a good course that I want you guys to experience it. So that's everything I got for you. Take good care. We shall see you tomorrow.